Good morning, traders. It is Thursday, the 10th of December, 2015. It's 8 a.m. Chicago time. Derivatives trading involves substantial risk of loss and it's not suitable for all investors. Past performance is not indicative of future results. Overall, the biggest thing we need to know for today is that the equity indices roll to March 2016. The contract symbol ends with H6 or H16, depending on your data feed. That's what I'll be quoting. That's what the charts are going to be built on. Now, with it happening, it's actually the official rollover date. If you go to the CME's website, you'll see that at 8:30, the front month is officially the March contract. My data rolls over. Has already rolled over to March. So a lot of my charts will show that the volume is anemic as more and more volume moves from December to March. So today we have a day where the volume is not going to be there for March in the analysis, and we kind of have to deal with this once a quarter, once every rollover. But it's okay. The overall picture is still expressed in the same way. It's just that the volume is not all there for comparison to the prior day. So comparing today's or what we see in our chart this morning versus where it was yesterday at the close, there are slight differences, but still I need to roll over to, because that's what my data does, and I've always rolled over with the exchange anyway. I don't really care which contracts got more volume. It doesn't affect me. I don't trade big enough to worry about not being able to fill 1,000 lot or whatever. So in keeping with consistency, I am looking at and quoting March today. This morning we got initial claims 282,000 versus 270,000. So quite a bit worse. Initial claims were higher by 12,000 contracts. Continuing claims came in at 2.243 million versus 2.16, also worse. Import price index came in at negative 0.4 versus negative 0.8% expected. And other than that, there's really not all that much. The BOE left interest rates unchanged at 0.5. They've been there forever. And that's really it. Looking at what we have ahead of us here coming into the session, we are looking for the 9:30 natural gas number. Wow, the screen just won't stay. Natural gas, there's a new number that I haven't seen before at 11 o'clock Central, 12 Eastern, U.S. household net worth, the third quarter. And then at 1 o'clock Central, 2 Eastern, we're looking for the U.S. monthly budget statement, looking for negative 67.5 billion. ECB Speaker Weidemann is scheduled to speak at noon Central, 1 Eastern, and BOE Speaker Carney is scheduled to speak at 1:30 Eastern, 12:30 Central. That's really all there is as far as what's on deck for today. Let's look at the technical picture here. Overall, not the easiest of trades. The overall sentiment here, the overall picture is that the market has got a higher time frame acting in it both ways. We're seeing very large swings in both directions. The higher time frame is called OTF, or the other time frame. And in general, I didn't do a trader bite yesterday, but in general, we were looking for responsive buying back to 54.75. The day before yesterday was completely balanced. And so we were looking for a test of the value area, value area high and low. So in the March contract, we were looking for 58.50 as the next test, and then 65.50, and then the next area we were looking to test was the 74.50 in the old contract. The difference between the ES December and March prices, December settled at 20.42 according to the exchange. Settlement was 20.42. March settled at 20.34 and a quarter. So these prices that you see here, if you're comparing them to December, these prices are going to be 7.75 points lower, or 8 points approximately. So the 74.50 was this high, and that's the next area we're looking to test. Now what it did is it pushed through to the MC point of control, which in the December contract was 20.80.50. And is represented here at 72. So essentially what we've done is we've done a couple days worth of work on the upside. So you can see here that the point of control, the MC point of control, was right up here, and that's where we went to before this really gigantic drop down. Yesterday's range was fairly high, 46 points. 45.5 points. That is above the second standard deviation of all ranges in the ES going back to October 2013. A very unusual day. Not only is it unusual in range, it's unusual in volume as well. And the selling yesterday was definitely meaningful. The delta on the December contract, the delta shown here is not going to be reflective of what really happened yesterday, because most were not trading March yesterday. Again, we have to deal with this just for today, but the delta from yesterday was actually not as far negative as we would expect. On a day like yesterday, we would expect the delta to be definitely below negative 40,000. Probably closer to negative 50 to 55,000, and it didn't even come close to that. So what that means is one of two things. It means that as sellers were selling, buyers were also buying. So there's the delta would hit lower and then would go up. As the selling came in, buying was occurring at the same time, and that's neutralizing some of the delta, even though price kept retracting. As a buyer, you always want to get a lower price. So if you're working a long-term position, you would want to sprinkle your order throughout a price range, and that may be the case where it was allowed to drop, and then as soon as it stopped dropping, buyers step in and lift, which neutralizes, which gives us a positive delta, or neutralizes the negative delta. The other way delta could stay strong, or relatively strong, despite the price movement. I mean, we did this whole drop here in essentially one swing of 46 points. The other reason delta would not be as negative as we expect it to be is because as price was dropping, bids were getting canceled, and so there wasn't much size to hit on the bid to give us more and more negative delta. Again, that shows that also shows that the sellers were moving price, but they were not doing so with conviction on volume. Now, with that being said, we did have really good volume yesterday. We did exceed 2 standard deviations on volume as well. Like I said, I believe the selling yesterday was meaningful, and this rotation down does create an impulsive move on the 15-minute, on the 60-minute time frame. This is what I expect to be the consolidation, and then I'm looking for it to continue lower. The next target down is 2017, which was the former 2026 that I talked about before. We did yesterday get close to the 2030 target below from that I mentioned Tuesday. Tuesday I mentioned that if we fail to push the primary expectation was we test up into the prior day's low, and then the expectation is we drop into the 2030 December price and we could not do it. We ended up pushing back into the range and then falling off. Very odd trade there Tuesday. And then we ended up getting that job done yesterday and pushing through to the next low volume node at 2030. Next area of interest will be that 2026, and that's the 2017 down here. So that's how things are correlating. I know it's a little confusing with all these prices flying around between March, December, and so on, but we only have to deal with this today. Tomorrow, pretty much everybody, almost all of the volume, except those who are continuing to roll into next week, next week's expiration, pretty much all the volume will be trading in March. So as you're quoting your contract today, be sure that those looking at your comments know which contract you're quoting. Are you in the H or in the Z contract, December versus March? So looking at the overnight session, we have a completely balanced profile. There was a fair amount of volume that went off at one price at some point, but we have a completely balanced profile. The market has pulled back to yesterday's IB. The IB is basically the overnight high. We have walked away from it. The overnight session is not giving us any clear indication as to what the intent is. This push up through the Asian session here is quite natural after yesterday's pullback. The market continues to consolidate. Again, the expectation, if the auction were to continue as normal, which it hasn't been, by the way, for the last week and a half to 2 weeks, the auction's been the higher time frame participants have been battling at these prices. Now there's a lot of conflicting information. Crude oil is pushing this thing around with the drop we've experienced and the bounce yesterday a little bit. The commodities are just getting hammered. Iron and other metals, industrial metals, are getting hammered, and so there's a lot to be concerned about in the on the macro level when commodities get hit, as I talked about on Tuesday. When commodities get hit, if you throw that up on a chart and do a percent line against those commodities, you'll find that the equities tend to roll over and go in the direction of commodities more times than not in the past historically. So there's definitely some strong incentive for a higher time frame to be interested in building a short position, but also the overall trend in consolidation so far has been on the side of bulls, and so the drops have been bought repeatedly. But overall, if we do what we normally do as part of the auction, then we would expect this move here to consolidate. The point of control was at the low. Yesterday was neutral. We did take out the IB high and we took out the IB low. We closed at outside of the IB. We moved the point of control to the extreme. This is a neutral extreme day. Neutral extreme days characterize a change in sentiment. The day before we had neutral. We took out the IB high, the IB low, but we closed in the middle. That is normal neutral. But yesterday is a neutral extreme to the downside. This is a further argument that we are likely to see a lower low again. 2017 and a quarter is the area below, the next area low to target. That's my primary hypo for today, is that we are likely to chop around on the open. Remember, the overnight session shows a completely balanced profile. We're likely to chop around. There's not much to price in this morning. Inventory is slightly long, but not much. You can see that the closing price yesterday is below. The current price is above. The delta supports the price action in that it is strong. The expectation is it's likely to chop on the open, and it's likely to get responsive towards 2034 and a quarter to close the gap. 2031.75. This is the area. It's actually the point of control somewhere in here. It's not exactly the 31.75 because um, yesterday's book was thin in the March contract, and so a lot traded at one price to shift it down. But overall, we're expecting it to be choppy here and then to test and take out 2026.50 as a primary hypothesis. This is fairly standard procedure under this kind of an impulsive move, and so I will be stocking on the short side unless we get back up above yesterday's IB, and that puts us in a thin zone, and we start to walk ourselves back up. As we've done over the last few days. Expect it to swing in both directions, but over the last couple of weeks, we have had strong buying on the close. Strong buying on the close, so I'm very sensitive to that. I'm watching out for that. There seems to be an OTF buyer coming into the 2:35 to 3 o'clock central period that's tending to push the market up pretty much every day over the last week and a half or so. But overall, I am looking for this to test lower, chop, test lower, and make at least a lower low on yesterday's 2026.50. Okay, so I'll leave you with that. I don't want to go into anything else and confuse you all. But again, all of my prices that are going to be quoted for today in the S5 chat room as well as Twitter will be on the March contract. Good luck, everyone. Take care. I'll catch you tomorrow.